Hello, everybody. This is Out of Order. My name is Anthony Buono.
My name is Ben Mayer.
And today we are going to be talking about the dollar gaining strength across the world. The value of the dollar is getting stronger and stronger in the international markets, and it's making a huge difference to the international economy. So, the Federal Reserve's decision to keep interest rates as high as long as they have has increased the American consumer's buying power around the world, and it has made the dollar very strong. So, let's just do a brief understanding of why this is. Because the dollar is getting stronger, it makes it a lot easier for Americans to buy goods from overseas.
Yes.
Right? It makes it a lot easier because now our cost to import stuff is going down relative to that other nation's currency.
Exactly. Basically, you think about it as now $1 buys you more of some other currency, which means that you have to spend fewer dollars to buy anything that is priced in that other currency.
Yes, exactly. And that has good and bad things that we're going to talk about in a second. That's good and bad for different reasons. But I want to give more of a little bit of a background here. American assets offer better returns than pretty much anywhere else in the world right now.
Yes.
And investors view the dollar as a very safe investment. You can make a lot of money just by sitting on U.S. cash right now. And people are taking advantage of that.
Yep.
In recent months, money has flown into the United States with a force that's being felt by policymakers and politicians from Brussels to Beijing, Toronto, and Tokyo. All these international banks and whatever, they're feeling it. All the money flowing out into American banks because it's just that much better of a financial tool now.
Yep.
It's that much more. The last time the dollar has been this strong was actually in the early 2000s.
Wow.
And that's when interest rates were around this same level.
Okay.
Yeah, the early 2000s when the U.S. dollar was this strong.
Okay.
Put that in perspective. Early 2000s, that's like, what is that? Is that
20 years ago.
Yeah, 20 years ago is at the end of the dot-com bubble boom.
Yeah.
Right? So that's that recession.
Yep.
Right?
And maybe a boom that followed it.
Yeah.
Yeah, and it's not just about the central banking strength of the dollar versus international currencies. It's also the strength of our economy.
Yes.
Right? Like that is something that underlies the dollar
Yeah.
and something that attracts foreign investment constantly.
Yeah, the fact that the United States is boasting 7% GDP growth since the end of the pandemic, that's shoring up the trust of America as a good investment.
Yeah, while still being the biggest economy in the world,
right?
By far.
While still being the biggest economy in the world by far. So now let's talk about, is this a good or bad thing? Because the way we just talked about it seems like it's all good, all good things. But there are some bad. Since 90% of international, so let's talk about some of the good. Okay. Well, no, this is bad. Sorry. 90% of international exchanges are done in dollars. Okay. 90% of all international exchanges, every time you buy oil or all these things, it's all done in dollars. Okay. It means that inflation will increase abroad because they have to buy US dollars in order to make these transactions. Okay. So countries that have borrowed in dollars now have higher debt payments and higher debt bills. So that's bad for those countries. Exporters that sell into the United States will benefit a lot. Exporters that are selling into the United States are going to benefit a lot because Americans can afford to buy more foreign goods and services.
Yes.
Your dollar can go a lot further in Europe than it can in America now.
Can I make a quick tangent here?
Yeah.
So recently, first quarter GDP growth number
I'm about
came
to
in.
talk about it.
Okay.
That's awesome that you just said that, dude.
Yeah.
Literally, that's what I'm going to talk about.
Okay.
The flip side to it being good for exporters into the United States is that it could widen the U.S. trade deficit.
Yeah.
Here we go. This is the flip side effect. Okay. So now businesses in the United States that are seeking to export their goods abroad will now have tougher competition with their foreign competitors.
Yes.
So us trying to sell our goods over to France, it's now going to have more trouble competing with the French counterparts over there.
Yes.
Because now it's more expensive to import our goods.
Yeah.
From France.
But because I think
we're not an export country.
Exactly. The net is good because we are a massive net importer.
Right.
So basically, consumers are just getting goods for less.
Yes. Basically, consumers are just getting goods for less. Technically, this is kind of bad news for the Biden administration. His goal explicitly has been to reinvent American manufacturing and make things in America again. Right? That's his goal. That's his pitch. Made in America. This hinders that slightly because it decreases our export capacity. But exporting has never been America's game over the last 30 years anyway. So
And Biden he doesn't really care about bringing manufacturing here to export it. He cares about bringing manufacturing here so we can reliably have the stuff no matter what another country wants to do.
yeah, the issue is just if foreign competitors are going to be outcompeting our onshore businesses.
Sure.
That's the problem.
Yeah.
But like you were saying, Q1 GDP growth. Okay. We had like 1.6% Q1 GDP growth, but that also came with a 2.5% increase in consumption at home.
Exactly.
Which is pretty strong. A 2.5 consumption is pretty strong.
And the 1.6 GDP growth was far below analyst expectations, which averaged about 2.4%.
Right. One of the big reasons it was lower was because of the trade deficit.
Yeah.
There was 0.86% reduction in our GDP growth due to the net exports.
Yeah.
And that's because the dollar gaining strength.
Yeah, and that covers the entire difference between expectations
Yes.
and where we actually landed.
Yes. So the higher value dollar could cause international economic slowdown. This has already hit Asian economies, China included. China's yuan?
Yen or yuan. I think it might be yuan. I think it's yuan.
Yeah, the Chinese yuan, a cheaper Chinese yuan will make their exports more competitive, but it will also increase the cost of imports and discourage foreign direct investment, something that China needs a lot of. Now, what China is currently trying to do is export their way out of a could-be recession, right? They're trying to export their way out of this problem. I just don't think it's going to work. I think they're going to try their best, and we'll get a lot of cheap goods for a short period of time. But until the Chinese consumer can actually reliably buy the things that they're making in the factories, it's not really going to be a feasible economic model.
Yeah, I think so too. China, I read a Twitter thread this morning about how China's institutions are so entrenched in the idea of supporting supply, building up manufacturing capacity, that even when it is clear as day to everyone who is watching that what they need is stimulated demand,
Boost the demand.
they are still stimulating supply.
Send out the stimulus checks. Give people stimmies.
Yeah,
They
but
won't do it.
They won't do it.
They won't do it.
So
Yeah, that's the effects of the U.S. dollar gaining strength abroad. It's really interesting. It's very complicated, but seeing the effects is really interesting.
yeah, and important.
Very important. Thank you for watching this episode of Out of Order.
I can't believe you made it to the end.
If you like this video, subscribe to us on YouTube, and if you really like us, check us out on Patreon.
This week, one of our videos is about Antony Blinken, the Secretary of State, and his tours to China and the Middle East.
Our other video is talking about Biden's new regulations in school meals about sugar and sodium content.
And then this week, we did a deep dive into why the U.S. and European economies are diverging so much.
Thanks, guys. See you on the next episode.